think it was broadly expected in the market. As you said, there was a little bit of a reaction after the announcement, but I think it was largely priced in. I think the consensus was that they were going to stick to their guns with the 400,000 barrel a day rise. And it depends who you are when you look at, was that the right decision for them? I think an announcement or a signaling to stick to quota increases of 400,000 barrels a day a month, that's very different to actually producing an additional 400,000 barrels a month. So since we've started with this new quota regime, we're actually behind significantly, around 600,000 barrels a day, and that's largely due to smaller producers seemingly unable to really ramp up their production as quickly as expected for a variety of reasons, force majeure or planned maintenance, for example. So, if you're one of the senior partners in the block, it actually looks like quite a good deal for you. You're able to continue to ramp up your production at the given rate, albeit you're not necessarily having to deal with the whole impact of a total 400,000 day impact.
Thom, can we stand down now on $100 a barrel oil, that alert? When you look at the supply and demand fundamentals, is that more consistent with oil in the mid-60s?
I think it's maybe somewhere in the middle. I think, in our view, $100 a barrel was never necessarily on the cards. That would have been a real kind of spike if we only look at the general narrative. We're entering the seasonally soft first quarter of the year. There was, general expectation that demand will contract in January and February. And that was one of the reasons why OPEC Plus bloc stuck to their guns in the past few months, despite cries from consumers such as the US to increase quotas. They knew that this was coming. So, we felt 80 was probably a little bit too fat as well. So we probably see, taking the supply and demand in tandem, probably see the market around $70, $75 a barrel. And look, if you're going to hang your hat on any kind of outlook, using Saudi Arabia's fiscal break-even, which is $67 a barrel Brent for 2022, but with a slight premium, it's as good a bet as any.